Welcome back. So, looking at the market session for June 5th, 2026, we had quite the dramatic storyline today. It started with Bull grabbing the mic right at the open, but then Bear found the RBI fine print, and ultimately, price closed the day with some serious caution. Let's break down exactly what happened.
The narrative really played out with these three main characters today. First up, we saw massive optimism. Bull was absolutely in charge of the story right as that opening bell rang, and it felt like we were off to the races. Just look at these opening numbers. Nifty gapped right up to around the 23,469 area, and the Sensex, it confidently blasted past the 74,500 mark. I mean, the green on the screens was almost blinding this morning. But, our good friend Price quickly tapped the mic and handed us a major reality check. And it's a lesson we always need to remember. A big green first candle is absolutely not confirmation of a lasting trend for the day. Honestly, it rarely is on policy days. And here's why things shifted. Bears started digging into the RBI fine print. On the surface, the repo rate stayed unchanged at 5.25%, and the neutral stance was maintained. Okay, sounds fine, right? Well, not quite. The fine print showed that growth expectations were actually trimmed down, while inflation assumptions got bumped up. That macro reality check caused some serious whipsaw action. Now, price did try to bounce around midday. We saw a bit of a recovery attempt there, but it completely rejected any sort of clean trend story. Instead, that noon bounce just faded away into a super choppy afternoon. So by the time the closing bell actually rang, all that morning altitude, totally gone. Nifty ended up dropping almost 50 points, finishing the day in the red at 23,366.70. And it was the exact same story over on the Sensex. It mirrored that afternoon fade perfectly, shedding over 116 points to finally settle at 74,243.34. If we look under the hood at the specific sectors, the mood was definitely a mixed bag. IT and metal, they were really heavy drags on the market today. On the flip side, though, media actually managed to show some relative strength and performed a bit better. So what does this all mean for us? Well, it just proves that policy days absolutely love to create whipsaw. They are notorious for it. And today clearly showed that caution simply won the day. And this choppy action is exactly why the local advisory package stayed in a purely defensive posture all day. We're talking a bearish regime, literally zero risk-approved trades, and 73 review-only names. Our really serious takeaway from all this volatility? Do not try to force a direction when the tape itself is completely undecided. Seriously, review only stays review only until the market evidence actually improves. Remember, a red close is not a reason to panic. It's just a reminder to stay prepared and risk-aware in these markets. Thanks for tuning into today's explainer, and please remember this is educational content only, not investment advice.